Hello all, greetings of the day. Today's topic for discussion is Introduction to Financial Management. First of all, before discussing the financial management, we try to discuss about the finance. Now what is finance? Finance is managing the money. That how you are managing the money means you have money, just consider as a day-to-day example of your personal life, that say for example you have some pocket money and you have to stay in the limits of that particular pocket money. So how would you plan your expenses in starting of the month, during middle of the month and during end of the month, so that before receiving the next month's pocket money you must have something in your pocket to meet any kind of emergency expense or any kind of expense, say which may be occurred after say 25th of the month. So this is just example that how we manage money in our day-to-day life. In the similar way, we have to manage the money in the business. So when we are managing the money in the business, there are so many parameters, there are so many theories, there are so many techniques which are covered under the financial management. And we can also say that when we talk about the business, finance is the heart of the business. You have a good idea, you have a good team to execute that idea. Say you have a plenty of other resources also, you have a space with you to start the business, but if you don't have money you cannot start the business. So that's why we can say that finance is the heart of the business. We have so many examples in front of us, like there are so many firms which have beared the shutdown during the as of the say deficiency of the money or finance. So it is the heart even of not only for to start the business, it is the heart of the business for the running businesses also, because if the business is running smoothly and suddenly there is a short of finance, then it would be a great problem and business may have to bear the shutdown. Money versus finance. So money versus finance, these two are technically the different terms. When we talk about money, say we have 100 rupees in our pocket, that is the money. When we talk about finance, it is a wider term. There are so many other resources which are covered under the finance. So when we talk about money versus finance, then finance is broader term as compared to the money. Some key concerns in finance. So what are the concerns in the finance? From where we have to make the financial resources available? One of the major concern, the first step, that from where we have to make the financial resources available. We have to start a business and we are in need of say 10 lakh rupees or 20 lakh rupees. So that is the ascertaining of the need. But now from where to acquire that money so that our business will also run, and that acquisition cost must be minimum, and how to easily acquire. Say for example, if you have something to pledge, then you may get the money at a lower interest rate. If you want to borrow the money, then if you have something to pledge, you may get the money at the lower interest rate. But if your loan is not secured loan, then you have to pay the higher rate of interest. So every businessman or every organization, they try that they must procure the money at the minimum cost. Now the money is procured. Money arrangement is made either by making somebody else the partner, or making use of your own money, or by selling off your any real estate property, or by borrowing the money. So these are the different sources of the finance. Now the money has been procured. Now the next question is that where we have to utilize that available financial resources, because we have procured the money. If they are not being utilized in a proper manner, then we may have to bear the losses, or we have to face the financial scarcity on the later stages, which may affect the efficiency of our business. So one of the important concern, that where we have to utilize the available financial resources. You know, a lot of people are having a lot of money, but they are not doing the business. Why? Because they don't have a proper knowledge that where they have to utilize their funds. They have a fear of losing their money. So if you are, say, once you gain the expertise that how to utilize the resources in the business, especially the financial resources, then you may reach to the success. Trade-off among production and distribution system. Now, why this production and distribution comes under the finance? Because when we are producing something, we have to distribute that among the customers, whether directly to the customers or through the distributors or retailers or wholesalers, as of the model we are following. So we have to do that. So we need a proper trade-off among the production and distribution system, so that there is no lag in delivery of our goods, as well as there should be no over cost of our stock lying with us. If our production is very much than the distribution, then also it increases our cost, and if our production is less as per the distribution, then it may lead to, say, shortage with our customers or with distributors, which is not good for the health of the business. And now, trade-off among distribution and retaining of profits. Now here the distribution is different. The distribution which we have discussed in the last point is different from this distribution, as here we are talking about distribution of profits. Now for every businessman, even if somebody is running a small proprietor firm, then also the businessman has a view of growth of the business. So from where to do the growth of the business? Initially, when we are starting a business, at that time we have arranged the funds, we have procured the funds, but now at the time of the growth of the business, the most important source of finance is the profits which we have retained during the last so many years. So we have to see, even if we are running the company, we have different shareholders, then all the profit cannot or should not be distributed among the shareholders. They are getting the dividend, but the major part of the profit must be retained in the business to meet the future contingencies, as well as to fulfill the requirement of further growth of the business or expansion of the business. Now, what is financial management? Now come to the point, financial management, the topic of the today. Before explaining this definition, I would try to clear you about the different terms, like what is money, what is finance, how finance can be arranged. So financial management may be defined as the area or function in an organization which is concerned with profitability, expenses, cash and credit, so that the organization may have the means to carry out its objective as satisfactory as possible. Now, as a firm, we have objectives like wealth maximization and profit maximization. As our objective may be, the proper financial management is required. It is that function of an organization which is concerned with the profitability, because profit is the want of every business. Expenses, how can we maintain our expenses in a way so that our revenue must be more than our expenses, or vice versa, that our expenses must be less than the revenue. Cash and credit. Cash and credit means that we have to maintain the working capital cycle to fulfill our day-to-day expenses needs, which helps the organization to carry out its objectives as much as satisfactory as possible. Financial management as a function of the finance, when we talk, or as a function of the management, it is related to the planning, organizing, directing and controlling the financial activities such as procurement and utilization of funds of the enterprise. Procurement means procuring the funds, and utilization means that where we are using that funds. So financial management is all about planning, organizing, directing and controlling the financial activities, as again it is a function of the management. Finance is lifeline of any business. However, finances, like most other resources, are always limited. The most scarce resource when we are starting the business is the finance. It is very difficult to procure the money. Whenever we have a new idea to start the business, the first and foremost thing which we have required is the money, and that's why we say it as a backbone of the business. And finances are always limited, so they can be taken care of in a very efficient manner, so that it will lead to start the business, and on later stages it will lead to expand the business. And on the other hand, when we talk that wants are always unlimited, it's like in our personal life when we are doing the business, then also the wants are always unlimited. Say for example, you have started a business in a city, after a year you have expanded that business in a whole district, then you have expanded that business say in next 5-7 years in a whole state. Now you have desired to expand it on the country level. So similarly, the wants are always unlimited, and we have to meet that demands. If we have to meet that demands, proper finance is required for the expansion, because unplanned expansion may lead to the failure. So all type of businesses, whether it is large, small or medium, the financial management is very, very important. It deals with the procurement, arrangement of funds for the business, keeping in view the risk and cost involved in it or in the procurement, and most important is the proper utilization of funds. Now, as I have discussed with you that we have different sources to procure the fund. Now, which source is more risky, which source is less risky? If the source is less risky, the cost is also less. If source is more risky, the cost is also more. So we have to make the proper trade-off among them while taking the decisions that where we have to procure the funds, because the cost and risk are involved in the procurement of funds and then utilization of funds. It is not only required at the time of the commencement of the business, but it is a continuous process for every enterprise. Now, the point we have already discussed this point, that whenever we want to expand the business, at that time also we require the financial management, like from where to make the fresh procurement of funds, whether our retained earnings are sufficient to meet the goal of the growth, or we have to procure more funds. This is one of the requirement of the financial management. Then other is why we are calling it as a continuous process, because we have to pay the salaries, we have to pay the electricity bills, we have to make the payment to the creditors, we have to maintain the stock to meet the say demand requirements. So all this is fulfilled with the help of money only, finance only. So it is day-to-day activity, and working capital management is also covered under the financial management. So what is working capital? Working capital means the capital which is required to say meet our day-to-day expenses or short-term expenses. So that's why we call that financial management is a continuous process, and as discussed that it is also very important at the time of expansion of the business. According to Gutman and Dowell, financial management means the activity which is concerned with planning, raising, controlling and administering of funds used in the business. Means planning. First of all, we have to plan that what we require, then from where we have to raise it, then the control of it, and then how we are regularly administering our funds which are using in the business. So funds administration is also very important, and it is concerned with the procurement and utilization of funds in a proper manner or in a proper way. Some other formal definitions. One definition has described the nature of financial management as financial management is properly viewed as an integral part of overall management rather than a staff specially concerned with fundraising operations. Or in a broader view, the central issue of financial policy is the wise use of funds, and the central process involved is a rational matching of advantage of potential uses against the cost of alternative potential sources so as to achieve the broad financial goals which an enterprise sets for itself. Now, what is the importance of financial management? First importance of financial management is financial planning. Financial planning is one of the importance of financial management. It associates with the financial requirements of the enterprise and the use of the funds in an appropriate manner to avoid any kind of difficulty on the later stages of the financial management cycle. Now, just try to understand. Again, I am repeating the example and adding some more to the example. Say I told you that say we want to start the business and we require 20 lakh rupees. it does not means that when we acquire 20 lakh rupees, we have to spend that 20 lakh rupees at one go. No, we have to keep some funds available with us to meet the future contingencies for working capital requirements. So that all is covered under the financial planning, so that we would not face any difficulty on the later stages. So this is how we have to understand the importance of the financial management, because it is a continuous process and we have to take care it that on any stage we should not face any difficulty related to the finance. Like the companies which are very well financially managed, they survived during the COVID-19 pandemic. How they survived? Because they have planned their funds in a way so that even this kind of uncertainty, where for consecutive 2, 3, 4 months there is a shutdown of their units, but still they survived. Why? Because they are financially strong. Why they are financially strong? It is not in the one day that they are financially strong. It means that over the period of time, over the previous so many years, they are managing their funds very, very efficiently. Then securing funds. Financial management is also important to safeguard the funds. It deals with identification of the different areas where funds are required and how much funds are required to be invested, which further facilitates to avoid the wastage and overspending of the funds. Means on later stages, we have to also take care that we have to avoid the wastage of the funds. So if any expert or any manager of the business, if feels like somewhere we are spending the funds which are not so necessary, so we have to avoid such kind of expenses, because on later stages it is being treated as a wastage of the funds, which is harmful for the financial health of any business. Now allocation of funds, this is very important. Now allocation, we have to see when we talk about asset wise allocation, then we have two type of assets in the business: fixed assets and current assets. Now we have procured the funds, now we are allocating the funds. How much funds are required for fixed assets? How much funds are required for current assets? Now fixed assets, if we have finalized that we are say spending or we are investing 70% of our total available funds in the fixed assets and 30% in the current assets. So it is not finished. Now 70% is finalized for fixed assets, 30% for current assets. Now there are so many fixed assets like land and building, plant and machinery, we have furniture to purchase, so many other things, vehicles, motor vehicles. Now out of that 70%, again further allocation among the different fixed assets is required. Similarly, in current assets, how much cash in cash at bank, how much to be say invested in the stock, that also has to be decided. So allocation of funds is very, very important. When we have funds, then another question in front of us is that where we are allocating those funds. Then growth and stability. For any business, two things are required. First of all, at present we require stability, and in future we expect growth, and we must expect a good growth and stability in any business. So finance managers are responsible for the growth and stability of the business to a great extent, and efficient financial management leads to the economic growth and financial stability of the business organization. Interdependence with other departments. Now this is a very broad topic. We will discuss later on about these topics in detail in our series of lectures. When we talk about interdependence with other departments, then there is a production department, there is a purchase department, there is a human resource department in the organization, then marketing department, then we have this finance department. So finance, when we talk about the finance department, then we can say that it has the interdependence with the other departments, and they have to work in a say cooperation and collaboration for efficient or smooth running of the business for a few future prospect also. Valuation of the company. Now very good, when we talk about valuation, say just if you have any say knowledge about the stock market, you want to purchase some shares, what you see? You see the valuation of the company. So again, the company having more valuation considered to be financially more strong. So expansion of the production capacity, geographical expansion within the country and overseas expansion, more the valuation of the company, more will be the interest of outsiders in the company for the purpose of investment, trading, etc. And if your company valuation is good, you may procure the raw material at lesser rates, so as to reduce your cost of production, and you can give the competition by selling your goods at the competitive prices. So valuation of company is very important from say our internal function also, and when we see the interest of the outsiders, then they also attracted toward the companies which are having high valuation, because they feel that their money is secured while investing in these companies. Capital reserves. An effective financial management results in creating the capital reserves in the books of company, which will give strength to the company's financial position and create opportunities for the expansion of the business. So we must have the capital reserves for the purpose of future growth and expansion. Tax planning. As a regulatory requirement of paying direct and indirect taxes well on time and advance tax as well, financial management also assists in the timely payment of all the taxes to avoid any legal persecution in future. Say for example, we have to pay advance tax, the last date has arrived, but we don't have money. So we have to bear the legal proceedings, we have to say pay the late fees, etc., etc., etc. So a proper financial management is also involves tax planning, where we are paying over all direct and indirect taxes in time, so that we must be in the good books of the legal authorities or statutory authorities. These are some references. Thank you.